Foreign institutional investors have been on a selling spree across most emerging markets, including India. They have sold Indian equities worth over $7 billion thus far in 2022 and over $11 billion since October 21, when they started to unwind positions here. According to analysts, the nervousness right now is more on account of the likely policy actions of global central banks, especially the US Federal Reserve, that has seen hiking rates aggressively in the backdrop of 3-decade high consumer price inflation in the US. This, they believe, can see the bond yields spike and make equities less attractive. According to Devang Mehta, head of equity advisory at Centrum Wealth, FIIs have sold equities since October 2021. What's worrying them is a long tenure of zero interest rates across the developed world that seems to be nearing an end. Any balance sheet contraction by the US Fed, either in terms of quantum or timing, can be a further hindrance. High oil prices are another cause of concern for our economy. Let us now go to Anirudh Sarkar, Chief Investment Officer at Quest Investment Advisors, to understand what is worrying our foreign counterparts.
If you look at the relation between FI flows into India and the index movements, I think there's a very, very strong correlation between FI flows and how the index behaves in India. Historically, a few $1 billion of FI outflows in a single month used to impact the markets in a very, very significant way. However, if you look at the last couple of years, I think things have changed a lot, and the domestic investors have started playing a very, very strong balancing act to the FI outflows. And that's the reason we have seen the impact on the indexes very, very minimal, even considering the fact that we have seen one of the highest FI outflows from India over the last 1 year. Talking about the numbers, I think in this financial year as we stand, except for the month of September, almost every month since the beginning of April 2021, FIs have been net sellers in the Indian equity markets. In the secondary market, FIs have been net sellers to the tune of around 1.8 lakh crore in this financial year. And if I take into account the net inflows of the FIs into the primary market, even then the net figure for the FI selling is very, very high in this financial year. Talking about the main reasons and concerns, what is bothering the FIs and why they have been selling in such numbers. The first on the mind is definitely the whole interest rate parity, which is something which influences the decision towards investing into emerging markets like India, wherein the risk-reward picture comes into play. With US Feds increasing the policy hikes, with increasing the policy rates, I think it's very clear that we have an interest rate hike all around the corner, and the announcements have been made that in the month of March, we are going to see the first hike after so many years in the US markets. Apart from the US Fed hike, I think the other thing which is concerning the market is, or the FIs rather, is about the impending elections in some of the major states, and most importantly in UP. And this is something which is again keeping the investor sentiments on the edge.
The S&P BSE Sensex and the Nifty 50 have lost around 3% each since October 2021, when the FII started to sell, data show. Realty, fast-moving consumer goods and healthcare indices have been the worst performers among sectors indices that have slipped 7% to 11% during this period. Domestic institutional investors and mutual funds, on the other hand, have used this opportunity to buy. Since October 2021, MFs and DIIs lapped up stocks worth nearly 68,000 crore rupees and 94,000 crore rupees respectively. Going forward, analysts say FIIs may choose to remain on the sidelines for now and come back in a big way in the later part of 2022. India is expected to receive a good share of flows once volatility subsides. Domestic flows from retail investors, HNI's family offices still remain strong and have provided a good cushion to the markets when FIIs intensify their selling. A good probability of earnings growth along with a decent valuation re-rating can compel FIIs to come back with force. Devang Mehta, Head of Equity Advisory, Centrum Wealth, says. FIIs, according to Jitendra Gohil, Head of India Equity Research at Credit Suisse Wealth Management, still look at India as a structural growth story despite the near-term headwinds. The selling pressure should ease a bit in the coming months as the economic activities gain momentum once the Omicron-related disruptions abate and corporate earnings catch up to justify India's premium valuation. Jitendra Gohil, Head of Indian Equity Research, Credit Suisse Wealth Management, says. The sentiment on Tuesday is expected to remain cautious with nervousness around the rising oil prices taking center stage. That apart, market participants will take cues from global markets before deciding their trading strategies. Stock-specific movement is likely to continue as companies announce their December 2021 quarter earnings.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.